Does Quebec require separate tax accounts from CRA? If you are used to dealing only with the Canada Revenue Agency, Quebec can feel like a separate country inside Canada. From a tax administration perspective, that is almost true. Quebec runs its own major tax authority and, for many purposes, expects businesses to deal with it directly rather than going through the federal system. For a US business, this means that once you step into Quebec in a serious way, you are often managing two parallel relationships, one with the federal tax system and one with Quebec's own agency. Understanding what has to be set up where will save you a lot of confusion. Two tax administrations, not one. The Canada Revenue Agency handles federal income tax and the federal goods and services tax for most of the country. Quebec, however, has its own provincial income tax and its own provincial sales tax, along with an agency that administers them. In some areas, Quebec also administers federal tax on behalf of Ottawa for Quebec businesses, which can blur the lines, but the key idea is that Quebec runs its own show. This separation means you do not simply extend your CRA accounts into Quebec. In many cases, you obtain Quebec-specific numbers and file separate returns, even if the underlying taxes resemble those in the rest of Canada. Sales tax accounts, GST, HST versus QST. On the sales tax side, the rest of Canada uses GST or HST administered by the CRA. Quebec uses the Quebec sales tax alongside the federal tax. Businesses that are sufficiently engaged in Quebec often need to register for QST with the provincial tax authority, even if they already have a GST or HST account with the CRA. From a practical standpoint, that means separate registration forms, separate account numbers, and separate returns. Your invoices to Quebec customers need to show QST details in addition to any applicable federal tax. And your accounting system has to track Quebec tax collected and paid so that QST returns can be filed accurately. Income tax and corporate accounts. Corporations with activities in Quebec can also face both federal and provincial income tax filing obligations. The federal corporate income tax return is filed with the CRA. A separate Quebec corporate income tax return is filed with the provincial authority using its own account structure. Although the underlying financial information is linked, the returns are not simply copies of one another. Each return applies its own rules, rates, and schedules. For a US owner, this can be surprising at first because it feels like filing in two different countries that share a common base of financial statements. Payroll and source deductions. If you employ people in Quebec, payroll adds another set of accounts. You may need federal payroll accounts with the CRA for federal tax withholdings and contributions, and Quebec payroll accounts for provincial tax and social security style contributions. Pay slips for Quebec employees will typically show both federal and provincial deductions, each reported and remitted to the appropriate authority. Ignoring the Quebec side is not an option. Quebec has its own audit and enforcement capability, and unpaid provincial payroll obligations can lead to penalties and director liability, just as federal ones can. Non-resident registration pathways. For non-resident businesses, Quebec offers specific registration mechanisms for sales tax and, where relevant, other accounts. These are distinct from the CRA's non-resident registration paths. A US business selling digital services to Quebec consumers, for example, may be required to register under special non-resident rules that sit apart from traditional brick-and-mortar registrations. This means that simply having a Canadian GST/HST registration with the CRA does not automatically mean you have done what Quebec wants. You might be fully compliant federally and still missing a QST registration that Quebec considers mandatory. Putting it all together in your systems. In practical terms, you should assume that Quebec requires separate tax accounts once your activity passes beyond a trivial level. That means your internal systems must be capable of handling different tax rates and account codes for Quebec, producing separate reports, and mapping transactions correctly to federal or provincial buckets. It is often worth designing your chart of accounts and invoicing templates with Quebec in mind from the start, even if you are not there yet. It is easier to switch on a Quebec profile later than to retrofit an entire system that was built assuming that CRA is the only tax authority you will ever deal with. Final thoughts. Yes, Quebec requires separate tax accounts from the federal system in many important areas, especially sales tax, income tax, and payroll. From a US company's perspective, handling Quebec is like adding a second domestic tax authority on top of the CRA. If Quebec is on your roadmap, it is smarter to plan for those separate accounts now rather than discovering them after your Quebec sales and payroll have already grown. For step-by-step guidance on how Quebec accounts dovetail with CRA accounts, you can explore our website for visual charts and examples. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.